Well, good evening everyone, welcome back to the channel. So we are going to do another live show to cap off the week. Well, good evening everyone, welcome back to the channel. So we are going to do another live show to cap off the week. Well, good evening everyone, welcome back to the channel. So we are going to do another live show to cap off the week. Okay, let me pause that for a second. I didn't expect to have an echo there. Alright, we should be on track now. Let's do a quick little intro. This is what happens when you do it live, right?
We'll do it live. Okay. We'll do it live!
Let's do it live. Alright, here we go. Let's get right into it, and I will go live on the Discord chat as well. That's going to be bottom left. And so we'll just kind of have a free-form discussion where, we'll talk about whatever. I titled it Growth versus Income again. Welcome to the first couple of you that are on. And I'll read comments here in a second here. Let me just get back to Discord over here. Let me do this. I like having everything on one screen for you all to see here. Okay, so we have Alexis Noakes on. Hi, hope you're having a great day. Yes, Richard King. Dissector, greetings and hello. Hope you're having a great day. Boomer Bill. Income is overrated. Not gonna lie. I think we have something for that there, Dissector. This is what we got.
Dissector, you are an idiot.
Had to do it. Okay, yeah, it might be a little bit overrated. Welcome, Chuck. Okay, glad to see those of you that are joined here. Okay, so what I want to discuss again is continuing the stable NAV versus high dividend yield discussion. Some of you all were disappointed with the funds that I picked for this afternoon's video, so we can go into that further. One fund that I discussed was an MLP. So there's a couple of other ones I want to discuss, like SCHD. We'll try to do a thorough analysis of that one, and then I'll continue to discuss the growth versus income. By the way, quick little plug for the podcast. If you all haven't checked it out already, the Brewing Great Returns podcast. We just did an episode about our favorite investing movies. We're going to have some interesting guests on coming up next week. We're going to have more fund managers. I know there was kind of a quiet week this week in terms of fund managers, but we'll be back to normal next week. Monday's April Fool's Day, so I was actually looking to have like a legit fool on the channel for April Fool's Day. That's a little bit of a joke, but that would kind of be funny, April Fool's Day, have a fool on the channel. Actually, we have a really good guest coming on Monday, a fund manager. So get you all's questions ready for Roundhill if you haven't already. We've got some good ones for sure, and I'll of course come up with some of my own. By the way, we should be getting our dividend announcements for the next week for Roundhill coming up here. And we have big dividend dates next week for YMAX. Let me go ahead and get that out of the way real quick. So next week is going to be, actually on the 3rd is going to be declaration date. So we should get Roundhill by the 1st, and then by the 3rd we'll get YMAX. And then those are actually, wait a second, this is, this is covered call ETFs. So let's see. Oh, we're not going to get them until the next Monday. Is that right? Yeah, the 8th. Okay, so that's that. And then the fund-to-funds and ultra ETFs are going to be mid-month. So we got to wait on those for sure. Anyone that wants to join in the Discord live chat, I'm live on there, so feel free to join in. Comment, question, or whatever, anything you have to say. Okay, back to YMAX is Alexis's favorite YieldMax fund. Why is that? Is that because it's a fund to funds? So I was going to start looking at SCHD. I can do YMAX first. Let's see how we're doing. I haven't been looking as much. So YMAX, let's see, since the beginning of the year. So it's been public for about 2 months. It's up almost $2 a share. Let's look at the dividend history again. I think we've gotten, what, 2 of them? It's showing a trailing 12 months. Oh, that's probably not doing it correctly. Let's look at dividend history. we've got, yeah, we got 2 of them. So if we take the most recent one, 0.568 times 12, that's, ooh, hold on a second. Yeah, so these newer funds are rebalancing every month, same with Ulti as well. So that's $6.81 divided by 2168. That is 31%. Okay, so that's, yeah, the fund-to-fund option income ETF. That is 31%. Not the greatest, but we see the fund at least going up for now. And then the YMAG is the Magnificent 7 one, and then there's Ulti. I'll do another video coming up on Ulti. I'm hearing a lot of excited people about that. Here are the top 10 holdings for the YMAX, because it's a fund-to-fund. So we've got Coinbase, Block, PayPal, Nvidia, Tesla, ARK, Disney, Amazon, Moderna, XOM. So you're saying they rebalance. So will they balance the weightings then? They're not going to balance out of any of these. I think the holdings won't change, right? What does Mr. Olinger have to say here? Tech is a bit overdone. Buddy of mine selling off his Nvidia and AMD Monday. Oh, Nvidia stock? Let's look at Nvidia while we're at it. So I continue to throw this out there that you would have been better off over the past year owning Nvidia stock instead of the YMAX NVDY fund with total return. Wow, Nvidia is getting an F for valuation, but it's got an A and A plus in every other category. Wall Street has it a strong buy. The quants have it as a hold. SA and analysts have it as a hold as well. Welcome, Keith Allen. Okay, let me add in on charting over here. Let's see. NVDY. Okay, yeah, see price return, 48% if we round up, 242% for Nvidia stock, and then of course the S&P is always sandwiched in here. But if we even look at total return, we're going to see a big difference still. Over the same amount of time, 120% versus 242%. See? So still better off in the underlying. And again, like I'm going to start saying in most every video, with growth, you invest, you get a total return, and then if you've held it for a year or longer, your tax rate is the long-term capital gains tax rate of 15% instead of the ordinary income tax rate of whatever your tax bracket is at, because you're being taxed at ordinary income. Let's see, they give the bad performing ETFs a lower percentage and the better performing ones a more percentage, which I thought was weird because the prospectus says equal weighting. But I like that they'd interesting. I figured it was equal weighting. Gators Rock is not a YMAX fan anymore. He says YMAX sucks. Interesting. Yeah, and the thing is, again, most of them are up, you know, in total return. But the thing is, even with the total return, you're still underperforming the index. So if you want income, income can come with growth as well. So, okay, there is Nvidia. Let me look at SCHD. There's so many SCHD fans out there, and me personally, I just don't get the appeal of it. I mean, if someone wants to come on and explain it to me, since it's been around, I mean, look at the S&P 500 versus SCHD. What did you say? Made some money buying Tesla when it was 13. Nice. You sold it at a good time. That's awesome. Okay, so in terms of price return, it's being lapped by the S&P, as we can see. I will even add on, let's see, the Qs over the same time horizon. Justin Jones says, I like SCHD slow money better than no money. Well, yeah, that's true. But again, if you're looking at total return, SCHD is like owning bonds, but more growth potential. Well, and at the same time, that's if you believe that the general market is risky, but all the indexes are up. I mean, look at the same time horizon here. Well, no, this actually isn't. This is since 1994. Let me just go back for like 10 years. Okay, here's price return over 10 years. I thought the S&P had actually done better than that, but look at the Qs, though. So your best play here was the Qs over the last 10 years. Now, if we look at total return, so total return, Okay, it's outpacing the S&P 500. So if you're a dividend growth investor and you reinvest those dividends, then you're getting a 200% return over that time frame. Over 5 years, it's almost tracking with the S&P. But remember, dividends are taxed for the most part as ordinary income, right? And then the Qs would have been the better play, of course. And then over 3 years, S&P is beating it. Over the past year, S&P is double, and the Qs 45%. And then year to date, there we go, year to date, S&P is actually the best play. Alexis says also into RSP, just got YMAX for income. Let's look up RSP. Let's check that one out. The S&P 500 Invesco equal weight ETF. And from what I see, it's underperforming the S&P itself. Let's go again to total return. And let's see, Mr. Ollinger says, classic 60-40 split, 60% in SCHD, 40% high yield bonds is for the super wealthy, but pretty safe. Oh, if you've already like made all your wealth. Ben Mallinson says, SCHD's dividends are qualified or taxed differently, right? Oh, yeah, that's right. Yeah, SCHD is qualified. That's one of the appeals of it. Yeah, so it's similar to owning the VU. Okay, so RSP, even in terms of total return, is still underperforming the S&P. So again, common theme. Looks like the indexes are better. Oh, longer term. You're right. Let me look at longer term here. Let's see. 3 years, still less. 5 years, slightly less. 10 years, almost the same. Almost the same. Maximum. Well, this isn't a fair comparison because this is like, this came 9 years after this one. So interesting. Okay, we had a new member join the Discord, but no one for chatting in the live chat. Okay, guess I'll just read comments then. Okay, so what next? Someone asked me in the comments from the video earlier, so SCHD was one. Let's talk about the SCHD, what do they do, the reconstitution, which I'm hearing that a lot of ETFs actually do this. Citizen of the Year, how do I get free money? Oh, that's a good question. That's probably the question of the night. Well, do you think dividends are free money? I guess it's all in the eyes of the beholder, right? Free money. Oh, man. Play lotto? Anyway. Okay, so SCHD, again, SA has it a buy. The quants have it as a hold. Just don't like that the Mag 7 is basically like 40% of S&P return. Well, that's what I'm saying. Common theme, you know, not to crap on dividends or anything, but total return, you know, is the key. And the growth investing is lapping around the dividends. So yeah, you can take income. If you want income, you know, you hold something for a year, you take shares of, oh, let me check Discord here for a second. We just got a fun comment here. Thanks, finally got in here after stalking your channel for a while. Interesting. Oh, what did he just join twice? Oh, I see. Anyway, so yeah, back to that. So again, growth, okay, you know, you sell out after like a year, you pay the long-term capital gains tax rate, and take income. If you need income, sell shares and take income. Do this. My largest holding, that's a good question. I have a lot of JP Morgan stock. Largest holding portfolio-wise would be index funds for sure. I would say probably a large cap index fund. I think I have a couple 100,000 in that one, in the 401k. I may do another 401k portfolio review, actually, because I'm about to hit a significant milestone in that account. Ben Mallison says, what do you think of an SCHD plus QQQ pairing? Well, let's look at it. I'll go to charting, and then I will add in the QQQ again. TLT weekly out of the money butterflies have been working pretty well for me. Okay, let's see. We finally had someone join in the voice chat. So let's see. Oh, we got our new person in here. Welcome. Go ahead and unmute your mic, and you'll be able to talk. Okay, while he's figuring that out, let me continue here. So SCHD, he's saying pairing it with the QQQ. That seems good, honestly, in terms of total return. Let's look at it. In terms of total return, yeah, I mean, if you like that, if you like the stability of SCHD plus the QQQ, it's not bad. Yeah, best of both worlds. Thank you to Blue Sky here for the comment. All right, let's go back here. Can you hear me, Meniki? Are you able to speak?
Yeah, can you hear me?
Yes, I hear you perfectly.
Okay, awesome. Thank you, man.
Yeah. So you're new to the channel?
Yeah, I've been like, stalking a bunch of investing channels on YouTube, and finally, took the bait here, joined your channel, kind of like it seemed like your community is kind of like talking amongst yourselves. So it's like, yeah,
Right.
and like I really figured out the whole options game.
Oh yeah. Have you done any options before?
Not really. Like I do have friends, like, real life friends that they do options,
Mm-hmm.
and they've been showing me their gains lately, and I'm like, oh my God, I'm just like staying behind. I mean,
Oh yeah. Well, we have a subthread in the Discord about the wheel strategy, and we've got some people in here that are doing a really good job with options. In fact, one person
yeah, I was
posted
reading
his
that,
yeah.
it's like, looking to be pretty good numbers, like, it's like I'm just thinking that, if you have some good dividend stocks that could, like, give you some reliable income, and then, at the same time, playing around with the options, like, like I don't see the need to have like a job at all other than just to get more capital, you know what I mean?
Right. Yeah, I mean, certainly, like,
Yes.
the money these people are making, it definitely replaces the full-time income.
Yeah, for sure. Especially
Mm,
where you can get out right now in a normal job.
right. Yeah, for sure. That's my goal too. I do some of these, not as much as these guys are doing, but I do some. I've done a couple of them last week that were successful.
Yeah. Do you have any pointers as to, like, how to start in the whole like wheel thing?
Yeah, so you got to get. I think it's ideal to have like 100,000 in a brokerage account, and you got to get options approval, and you start out by selling cash secured puts against a stock that you pick a price that you like and that you wouldn't mind owning that stock for, and then say, I wouldn't even call it worst case scenario because it's like a win-win. You keep the premium no matter what, then you get into the stock for the strike price you select, and then you're in that stock, and then you can sell covered calls against it, and then if you get called out of it, you keep the premium no matter what on the covered call as well, and then say that you go into the money with the covered call, you get called out of that stock, and then boom, then that stock is sold, you get that money back, and then, like they say, rinse, repeat. Start with the, cash secured puts again, and that's, hence the term wheel strategy.
So do you buy a put or you sell a put to start?
Sell. You sell what they call a cash secured put, meaning you either have the cash or the margin in the account to
Okay.
potentially buy the stock.
Yeah, like, my account is nowhere near 100K, but
Yeah.
I do have, I do have like a 20K account, and I do have some stocks of which I have, like, more than hundreds of shares. So like I'm sure I could, like, start playing around with those just to see what happens, because I don't mind buying some more shares. You know what I mean?
Yeah. Well, you could even do them like with 10 or 20,000. I mean, you get margin, then you have 40,000 if you're, if it doubles what you have in cash, and then you can do a few of them at least. Like one of my favorite ones that works well because it's a relatively low price is Marathon Digital Holdings. So with that one, you at like $20 a share, and I sold 10 contracts on it, kept like 1,300 in premium. And
Wow.
well, we just had like two more people join in. Yeah, we're having an options discussion here. Oh, one left.
I think that that's happening when channels are new. People just keep up and off.
Well, so my channel's
Even
not.
doing it will happen. Where you're gonna have to manage it.
Oh yeah, well my channel's not new, but this particular style is new, being live on the Discord.
Yeah, it's pretty fun. That's what got me to join actually.
Awesome. Yeah, we're really gonna ramp it up. One thing I got to do is schedule it for sure, because I've just been popping up the last couple of days, just saying, hey, I'll go live. But yeah, I'll be scheduling it for sure.
Okay, so you did Mara and you just got 10 contracts, you said?
Yeah.
Okay, so that would be $2,000 that you put in it?
No, there's no money put in actually. I sold the puts for premium.
Oh.
So it was like a $1,300 premium. Well, one week I rolled it because I actually didn't want to own the stock at that price. So I ended up rolling
Okay.
it. And then because we had the Fed announcement last Wednesday, I closed them out for probably a 90% gain or so.
Wow. And how far away are you getting those options? Is it a week away or
It's usually
You know what I mean?
weeklies. Yeah, weeklies. And I try to go as close to the money as I can. It's sometimes it's the parable, the guy that flew too close to the sun and then the wings melted. You don't want to do that, but you try to go just close enough without getting burned, so to speak.
Okay. And what would be a scenario where you actually do get there? I'm not sure if I'm asking way too many questions. Let me know.
Yeah, I mean, it depends because some people say there's no downside to this at all. For me, I don't really want to own Mara stock. I just like to collect the premium, so I like to roll it. Or either roll it or let it expire out of the money.
And by rolling it, because I've heard that a lot. I have no idea what it means.
Yeah, so rolling it, if you're in the money on an option, and say it's Thursday or Friday is going to be the expiration date, and by open of market Friday or even in the before hours you may get assigned, you would want to roll that to a week or more out. That way you're not in the expiration day.
Okay, so it's kind of somehow you change, okay, let me just keep the same contract and have it go for next week.
Yeah, you're just rolling it out.
Okay, so it's kind of just changing the order. I mean, the order that you put.
Yeah, exactly.
Oh, I see. And you're still collecting premium?
Yeah, you collect more premium actually.
Oh my God. A lot of this just seems unreal. I keep hearing people telling me you're right now.
Well,
no down.
that strategy is not 100% guaranteed every time, no matter what. So most of the time, yes. Most of the time, yes. If you are conservative and you stay on top of it, then yes, you can do that kind of stuff. But that doesn't mean it can't go wrong. There's still risk.
Okay. Can you give
certainly.
me it doesn't need to be extreme, but a scenario where it actually goes wrong, just to have an idea.
Well, say if the price of whatever holding is moves too quickly, or too far away from your original strike, then you may not be able to roll that for a credit where you earn money. You may have to roll it for a debit where you have to actually spend money to move that position to a better strike.
What I try to do, in that situation, I try to just roll it out even further to collect some sort of positive premium. That way I'm not having to spend any more money. But I get what you're saying. If it moves too fast, then buying it back.
But if you have to go out so far to make to make a premium, then you have to do the math to make sure that it's actually worth doing.
Yeah.
Because you don't want to go so far out that you end up making like 3% of your money, kind of thing.
Right.
Okay, I see.
Well, and
So
that's the
like,
downside too. Like I was about to get to, if you end up wanting to buy back. So rolling, you're basically buying back the current option, then selling another one. So you're rolling it out like a week or more. But if you just buy it back like to close, then you could end up taking a loss on that if you just end up buying it back.
okay. So for the wheel, you're looking for some volatility, but you're not looking for like extreme volatility.
Yeah, well, I would say you're looking
Relative.
for if you're looking for just the premium, you're gonna want a stock that's unlikely to hit that strike price, either on the call side or the put side.
Okay, that's kind of funny. Sometimes the way the market works, like the ways you can make money is like
Hmm.
ridiculous.
Yeah,
It's like, oh my, yeah.
but yeah, I have had that happen, like what Texas Heat was saying there. I have that happen. I have had that happen where I've ended up rolling it so far out, and then, like he said, it ends up being kind of like not worth it. So yeah.
Okay. I heard in the show that, I think it was yesterday.
If you can add contracts, then that helps too.
Hmm.
So if you start off with like one contract and say it kind of goes the wrong direction, then you can roll, add a contract. So you're bettering your position, collecting a bit more premium. So if you can kind of size in as things go against you, eventually it won't go against you, and then you'll just hit a win on all of it.
Hmm.
Okay, I see. And just to make it clear to myself, like one contract is 100 shares. Right?
Yep.
Yes. Yeah, one contract
Okay.
controls 100 shares of whatever the underlying is.
Oh, I see. So if I'm doing like 20 contracts, that's like, okay, I see why the numbers, like, why you need a lot of money for. Like, yeah, okay.
Well, where it
Yeah,
can
to
get
do it on
risky.
a
Hmm.
yeah.
Yeah, go ahead.
I was just saying, yeah, to do it on an underlying that is worth owning can be pretty expensive. Yes.
Yeah,
Okay,
because
okay.
if you've done 20 contracts, then you're looking at potentially being assigned 2,000 shares of that stock.
Right. And well, as long as you're not assigned, like, you don't get like, I would say charging your margin or whatever. Like if you do get assigned, you gotta pay for it because you own it.
Yeah, so you would have to have the money in the account or the margin to own the securities.
Okay.
Hmm.
Okay. Yeah, because I was thinking of like, I've been following PLTR Palantir for quite a
Yeah.
while now, so I kind of like, the daily moves and like, how it moves along and kind of feeling comfortable with it. So I was thinking like, it's going like 23, 24 a share right now.
Hmm.
So that, one contract would probably be like $2,500, a little bit less.
Yep.
Okay, I see, I see.
Is it that expensive now? I haven't kept an eye on it.
Oh yeah, it's been pumping, It's been getting some like apparently some um what is it like index or whatever. It's not. It's just I'm not sure, but it's not the retail people buying it anymore. Just like a lot of funds.
For Palantir.
Gotcha.
Yeah, yeah. Since
Let's
2024, it started pumping up.
let's look it up. Yeah, it has been going up because I actually bought some like 2 years ago. It has been coming up.
Oh yeah, I went from 16 to $25 in February in like 3 days.
Wow, in a year,
Yeah,
it's 188% price return.
yeah. It's like, and I think still has more upside because just barely now is starting to like get like positive attention. Because like 2 years ago, everybody just said like, "Oh, you're just wasting your money if you're buying Palantir."
Mm-hmm.
Apparently, it's legit, you know.
Yeah, I don't know. Maybe their fundamentals changed.
Oh yeah, yeah. Like they're actually making money, and it's like they really have like almost no expenses.
Yeah, let me look at that. Yeah, net income's positive. Oh, see, they've been turning around. I have it on the screen here. So 2021, 2022, they were negative. They're positive net income since Q4 of 22. And then let's see. I'm looking at the
Good
cash flow
job.
here.
Yeah, so that's like I said, I haven't followed this thing since it was $7. So yeah,
Mm-hmm.
their fundamentals must have got turned around,
I
Mm-hmm.
think
which good
they're
for
just
them.
like a software company that's trying to stay relevant in the whole AI thing. They're like, I've heard that they're trying to make quote unquote, I don't even know what this means, but the operating system for the whole AI thing, which kind of sounds like, you know, like too much, but hey, you know, they're getting the money in.
Mm-hmm. Yeah, true. Yeah, I'm looking at the Mara trade that I did that I was telling you. For some reason, it's not showing up like on my capital gain, but I bought it back to cover on the day of the Fed announcement, which was March 20th, and I had sold it on March 14th. So I netted like 1,600 in premium.
And that was on 20 contracts.
10.
Oh, 10 contracts.
Yeah, 10. Yep.
Okay, so
Yeah.
like 2,000 shares on it.
It would be 1,000. 10 contracts. Yeah, so 1,000. Yep.
And it's like 20, so that's like, you know, just to move that, you had to have like 20 grand.
Yes, exactly. That's the thing. That would be the capital requirement.
Okay, but that's a quick 1,000 out of like, you know, just having 20 there. So it's like
Yeah, if you can
not
do
much
that,
of a risk.
if you can do that once a week, then yeah, that's a quick $1,000 a week at least.
Yeah, yeah.
Yep.
Definitely makes sense. You know?
Yep.
Yeah, so like if you're not playing, I would say like more than 10K, you're probably not making much money. But if you're anywhere close to that, then it's good.
Yeah, for sure.
Okay, okay.
Mm-hmm. Let's see. We had a couple more people join. We have Pay the Piper on, and then someone named Marsh1022 that's popped in and out. Did you guys want to say anything? If you do, just unmute. If not, we'll just keep talking. So yeah, what other option strategies then? I do like buying calls as well. Those, when the stock moves up, you can make a lot of money on just buying the call and then selling it at a higher, as the value has gone up.
I'm just checking in, listening.
Oh, welcome.
Good,
Yeah.
Great conversation.
Yeah, thank you.
Hey, Coach. How you
Yeah, hi.
doing?
Good. But yeah, I do like buying calls too, and selling them, for a higher price. If the company has good earnings, or if the stock runs way up, like calls on Nvidia, for example.
You guys talking wheel strategy or?
We did talk wheel strategy. I was starting to just talk about call options, but yeah, we spent about 20 minutes talking about the wheel strategy. I was telling them about my closed trade and Mara.
Oh, you sold the put?
Yeah, I did 10 of them, and then when the Fed announcement happened last week, I just bought it back at a much lower price, so netted a nice gain.
Does what's his name? Texas Heat? Does he sell puts or no?
I think so.
Yeah,
Yeah.
I've done put in calls.
Yeah.
Yeah. What's your if I could ask, what's your I guess your flavor of options? Which ones do you like the best?
I like wheeling. I've the most done a lot of wheeling in the past, and and I do credit spreads, and I typically do it on indexes.
Oh, just indexes?
Which strategy? Yeah.
Yep.
Which strategy is the most profitable?
From what I do,
Yeah.
uh,
So I'm still super new.
I mean, it's all profitable. You kind of determine how profitable it is.
You
We had
can
to do
post.
one.
You
Right
can
there.
you can post them in the wheel strategy too. We have a lot of people posting them. I'm gonna post mine as soon as I get the realized gain on it.
Yeah, I'm posting on mine too.
Yep.
Well, like I
I
do
mean,
like spreads on indexes that I obviously can't afford 100 shares of.
Yeah.
So that's when spreads come involved. And then if it's a cheaper individual stock, then I'll do puts and calls on. But I haven't done those much here lately because I usually just kind of hold indexes.
Mm-hmm.
very cool.
What are some of your favorite
But
companies to trade options on?
for me,
Mm-hmm.
I haven't done it in a while. Um, let's see, who was I? Remember? I think I did a tiny amount on AMC back in the day. I think I did Peloton back in the day. A tiny amount of Neo.
Oh yeah. Like.
Um, I did a lot on Intel.
Mm-hmm.
Back in the day. The most I did was on Intel. But that was because they were about $40 at the time, but they had a 5% dividend. And so I was able to wheel their stock,
Mm-hmm.
basically doubling the dividend, if not a little more. But then they cut their dividend going into it because of fundamental changes in the company to move towards different production goals.
Oh okay.
But Ford, I've done them. I did. What was it? Carnival. I had a bag hold that for a long time.
Carnival Cruise Lines.
Yeah,
Yep.
that was a terrible one. I'll never do that again.
Yeah.
Wait, was that during
Um,
COVID?
it was before COVID, so I was in it going into COVID, so I got screwed on that one.
So you haven't been trading in a while though.
Uh, Not an individual. I don't really like doing individual stuff
Okay.
too much anymore, just because uh I don't know. I like to be more diversified. I don't like the idea. It's hard enough to bag hold a stock you want to own, and it's a lot harder to bag hold a stock you really don't want.
Right.
So, and for me to, so if you want something that you want to hold, it's usually expensive, right? Like we're talking minimum $5,000 for one contract.
Mm-hmm.
Um, so like Intel right now is $44 again. So
Yeah, and I see they cut the dividend.
$4,400.
They cut the dividend last year, like you were saying.
Yeah, what it was is they knew that their revenue was going to be dropping because they were going to be putting more focus onto developing the manufacturing of the chips in the United States.
Mm-hmm.
And so because of that, they cut their dividend to hold more cash on hand to be able to make moves when they need to in regards to the new production. So, and it's going exactly according to plan. You know, they're about 1 year or so into it. They just got their additional funding from the government to keep moving forward with building the facilities and stuff, and then I think probably another 2 years those will be online, and they'll be making more money.
Oh, okay.
So.
Yeah, let's look at what they did last year. I know I had some Intel. I think I sold it, actually. Yeah, they did 51% last year. Year to date, they're down 12%. Let's see here. We had
They dropped. They went from like 40 to 25, and now they're back up to 44.
Yeah, yep. Yeah, that would have been a great time to buy when they were 25, and then they came back from there.
Are you trading? Are you trading weekly, or you're not trading anymore? How much are you earning per week? Just curious.
It just it depends on the current conditions, right? Because the current conditions will determine if it's a good week or bad week. But I ended up, I'm trying to remember, I was risking about $4,000, and within a year I probably made, I think it was about a 25% return, 20 to 25% return within that year on Intel alone.
Nice.
Oh, okay, so you're not doing like any weekly stuff.
I'm trying. I think it was. I think it was some. I had some weeklies in there. I think I still have the spreadsheet.
Gotcha.
Let's see. We had.
Yeah, it's kind of
good.
weird to think of it weekly, right? Because if that week goes wrong, then it doesn't really matter because you're just gonna roll. And so you kind of have to just calculate it.
Well, you can
out.
roll it. You can roll,
I
or you
mean-
can take it and just sell calls on it.
Yeah, and I did. I had. Yeah, I don't really see expirations on here. But no, I had like 40 different contracts for about a year. Yeah, over a course of a year. So
Mhm.
what would that be? Like, yeah, about four or so a month.
Yep. We just got a comment here. He says Steve Jobs wanted Intel to make the chips for the first
Maybe a
iPhone, but
little less.
they turned him down. That's an interesting fact. Let's see here. GFY joined. Did you want to say anything, GFY? He's got the cool logo with the the green substance. And then we have Marsh 1022 on, just listening in, I guess. Anyway, well, if they don't unmute, we'll just keep talking. Yeah, that's an interesting fact. So a commenter said Steve Jobs wanted Intel to make the chips for the first iPhone, but they turned him down.
I don't know. I don't know if Intel was really in that space for mobile processors.
Right.
So I can kind of understand that if they didn't want to put the R&D into it.
True.
Because I'm sure there were still a handful of companies out there, Snapdragon and whatnot, Qualcomm, that were all doing that probably prior.
Oh yeah, Qualcomm. I sold out of Qualcomm too soon. I think I sold it in 2021. Let's see, this commenter, Keith Allen, he thinks Intel's GPUs might one day compete with Nvidia.
Yeah, that remains to be seen. They're still back of the line when it comes to all that right now. But they're trying to do it. And
Yeah. Are you guys...
I commend them for that, for trying to fight the duopoly.
Yeah, for sure. Are you guys doing anything on Nvidia?
on the actual stock, no. I just have Nvidia,
Oh, for yield
which,
max.
which which is killing it for me.
Yeah, yeah, it's up like
I'm up over.
120%. Yeah, total return.
Yeah, I'm like over 50% return on my position.
Hmm. When did you buy in?
I don't quite remember. I had switched portfolios or brokers.
Hmm.
So it was pretty much. Actually, this might tell me. It was near the beginning.
Oh, really? Yeah.
Yeah, my cost basis is pretty low.
So you're up in price return 50% because the total return with the dividends reinvested, it's like 120%.
Where's my position here? Yeah, my average cost is 21.80.
Hmm.
Uh, yeah, I was buying back in September of last year.
Oh, okay. Yeah, that's pretty good. What is it? AMD and Nvidia are like the two. The duopoly.
No, yes, yeah, sorry, AMD, yes, AMD and Nvidia. I was thinking CPUs, which would
Hmm.
be Intel and AMD.
Yeah. I'm gonna look that one up too. 90% in the past year. Let's see.
Like I have an AMD CPU, but I have a Nvidia GPU, so I got both on my computer.
Oh, wow. Interesting. So at the same like desktop, you have both.
Yep.
Oh, cool. Did you build it yourself?
Oh yeah.
Oh, nice.
This is my second PC I built,
Hmm.
and I just updated my BIOS. That was 5 years old today,
Oh, okay.
so had to go into my BIOS settings and flash it, Q flash it with the new software.
Hmm.
I had recently updated it to the Windows 11, and I was thinking that updating the BIOS would help with a few bugs.
Oh, yeah. I pulled
Yeah,
up
she's
bar
running like a champ.
charts.
She's about 5 years old.
Oh, that's good. Yeah. For 5 years. Yeah, that's awesome. I pulled up the bar charts, the covered call screener. They have one for puts and for calls. A lot of different screeners. I got the premium membership on it, so I've started using it.
What's it got for the next week?
I'm looking at just the options screener. What do I see here? Double A. Let me look at for covered calls here. OCGN is at the top of the list. X4, CLSK. So it's got a lot of different numbers here. It's got moneyness. I assume that's like probability of being in or out of the money. It says net debit, return if flat. Here's the
The
delta.
money needs meaning. It's how far you away from the money.
Oh,
How
yeah.
far you away from the stock price.
Yeah. Who is that talking?
This is Sam.
Oh, there you are. You unmuted. So,
Yeah, Sam.
yeah.
What's up, Sam?
Hey.
Yeah, welcome to the live show.
Oh, sorry.
I like your icon there.
Sam, are you still doing Tesla puts at
Yeah,
10 delta or what?
Yeah, around 10 delta. Yeah. I got about 40 contracts out there right now for Tesla.
Puts, like protective puts.
No, Sam is a Tesla guru.
Oh, really?
I'm not saying hero. I'm bullish long run on Tesla.
Yeah. So
Yeah, just
got, like,
buy
a million
buy
shares.
the guys.
So tell us about Tesla. Give us a pep talk. Is it going to recover in the next year or what?
Well, I'm a long-term investor. I only sell put to acquire more shares eventually. I
Oh,
don't worry
okay.
about the short-term fluctuation. Yeah, I don't
Okay.
worry about the short-term fluctuation.
Yeah. So are you doing
I'm trying to acquire as many shares as possible in the next couple of years.
Oh, okay. So are you doing the wheel strategy with Tesla?
I do, but very conservatively because again, I don't want to test out the moon, right? That he get my share call. So my calls are at 10 delta, and
Mm-hmm.
so my put is between 10 and 15 delta right now.
Okay.
Wait, what are your puts at, Sam?
My put because it used to be about 30 delta because I want to acquire the share because I'm using margin, right? Even though I'm fully
Right.
covered, I'm doing between 10 and 15 delta right now for a put.
Yeah. How many contracts are you selling? Are you doing weeklies or monthlies?
I'm on monthly. Right now, Tesla, I got about 40 contracts for put.
Wow,
Wow.
I
that's
think
that's,
that's probably
that's pretty
$500,000. I
good.
think. But I don't think I'm going to get a sign on at once. But yes. But the call I got, I only trade half my shares on calls. So I'm trading 52 contracts right now for calls
Mm-hmm.
at
So
195 and
you're earning
200.
both ways. You're earning both ways then.
I'm sorry? That's not
You're
loud here.
earning, yeah, you're earning both ways then on that, right? The
Correct,
call
correct,
side and the put
And the
side.
put side. Yep.
correct.
Wow,
I'm
damn,
far enough
that's a
on
lot
both
of
ends.
contracts, Sam.
Yeah, I'm far enough on both ends that I should be, no matter what happened, I'll earn something, right?
Yeah. So how many shares of Tesla do you own now?
11,000.
Nice. Wow.
But I only trade half of it right now
Okay.
because again, I don't want the other one to be called away just in case something happened. But I
Right.
think version 12.3.2 right now, which is the latest FSD. If you look up on YouTube, you can see how advanced it is right now because it's completely written by AI.
Mm-hmm.
And a lot of people think this is the ChatGPT moment
Oh yeah.
because in version 11, right, it was all written by human. Now it's all written by AI. So this version, a lot of people think, a lot of Tesla bull like myself think this is the holy grail moment of FSD, right?
Mm-hmm. So what do you think the next catalyst is going to be for Tesla? The Cybertruck?
No, they saw FSD is the big challenge, right? And people would eventually realize that the energy business will grow faster. It is growing faster right now in a rate than the EV. It's the storage business, right?
Mm-hmm.
Then the Optimus robot, I think they're going to deploy the Optimus robot within the next couple of years. That's also a challenge.
Yeah.
But when people really, if you look at the energy business, the margin is higher than the car right now, right?
Right.
It's 7% of the business. But I suspect that within a couple of years, it'll be like 15 or 20% of the business.
Yeah.
Right? But by the time people see this thing, it's too late for them. Right? The stock will go up high enough that people are like, oh, why didn't I see this before, right?
Right. Yeah, so on the option screener here I'm looking at, so it's got like the current price and then the strike price. I think this is the one that it would recommend. So like for Mara, because I haven't done this in like a week, so it says $21 strike. It's currently at $22.58. And it's got expiration date May 17th. It's got bid, BE percent. What's BE percentage?
You got to filter it out. You got to narrow those filters, Coach.
Okay. So this is the main view.
So I narrow those filters to weekly, expiration this Friday, and then you can filter it by bid, and then let's say less than $100 share price. So you can literally filter it down to
So I did
whatever you're looking for.
a filter view. And now this has Strike price, last trade, date to expiration, volume, moneyness, bid. How do you add in like your own stuff though? Oh, custom view?
I'm not looking. I'm away from my phone. I'm by the pool.
Oh, okay. Yeah, it's something like that though. Oh, Soundhound. Soundhound is on the list.
Sam, are you still there?
Yeah, I'm still here. I'm just waiting in line.
What's your margin? What's your margin rate on Tesla? What broker are you using?
I'm using Fidelity, but I have all the money to cover it. I only use it as, just like credit card rebate, right? If I get a sign, I have the money to cover. I have the money to cover it. I do not intend to use margin in the way that most people are using, meaning that I do not intend to pay any interest on that margin.
Right. If you don't get a sign, you don't have to actually pay any interest. Correct.
Correct.
Yeah.
Right. I'm using margin so that I can buy more, or sell more contracts. But the minute I get a sign, I will pay it off.
That's important for the audience to know what you were just saying. So if you don't get a sign, you don't pay any margin interest, right?
Correct.
Yeah. Good to know.
Yeah, so if you're doing like a 10 delta, you might not be.
The amount of margin you can use to do that is less than your normal margin.
Mm-hmm.
Oh, okay.
It's usually half. So if you had $20,000 in available margin, but they'll only let you do like 10,000 in cash secured puts against your margin. So if you were going to buy the underlying, you could do 20,000, but if you're doing cash secured puts, they'll only let you do 10 as a reference.
Oh yeah, so you're saying like 10 on margin.
10 on cash secured puts. If you had $20,000 in available margin, they'll only let you write options against that, usually about half.
Right.
Yeah.
With what brokerage is that?
That's most brokerages, from what I understand. Robinhood and Fidelity do that I know of.
Yeah, I don't know. I have about 8 accounts on Fidelity, but the account I'm trading with margin right now, it looked like they give me 1-to-1 ratio. There's about $600,000 in that account. So they actually give me a margin of $600,000. I don't know why, but again, I'm using only. Currently, I'm using about 15% of that margin. Yeah, like I said, I'm using it to sell more contracts. I have no intention to pay interest on it. I think that's a little bit safer than using margin to like leverage yourself to buy security.
Yeah,
and that's a great strategy.
Yeah, sounds good. Yeah.
Yeah, that's a great strategy. Sam, who are you with? Fidelity, you said?
Yeah, I'm with Fidelity. Yeah.
Yeah. I'm on portfolio with IBKR, so it's like different rules.
Interactive broker.
Yeah.
Yep. I have an account with Fidelity. I have one with Charles Schwab and E-Trade. Yeah, go ahead. What?
No, I was going to give you a little bit. Again, this is just my take on it. I know you use a bar chart because I do too.
Yeah.
I usually sort it by the IV first, right?
Oh, okay.
Then I look at the volume second, right?
Mm-hmm.
Then I check those companies individually. Some of those companies, unless you're really risky, you want to stay away from, especially on high IV, because you want to look at the company that you somewhat don't mind owning. Because some of these companies, even though they're good in trading options, if you get a sign, there's going to be a problem, right? So I like almost every night I go through bar chart and look at these companies sorted by sorted by IV first. Then I look at volume, because there's no point, even the high IV, there's no volume trading. That means there's no market for the option change, right? So you can't even sell and buy because there's no market.
Mhm.
Look at volume second, then go in through each individual company to see how the company make money. If they're making any money, is the price earning positive or negative? Price earning ratio, the PE.
Mhm.
If it's negative, okay, why is it negative, right? Is it
Yeah.
a medical company, right? They're still, they're still doing R&D. They have a good, for example, like VKTX, right? Which is one of the one they recommend. That is actually a decent company, but they don't make any money because they're still trying to get approved for the experimental drug, right?
Mhm.
So there's a reason for that, right? But some of these companies that they recommend has no business being in business. So you have to
Really?
be very careful and research. You have to be very careful and research why they exist in the first place,
Yeah.
right? And just, I guess, what I'm just saying, be cautious in what they recommend. I would look at, compared to what they recommend as trading, right? Strong, and also look at, there's another column onto the left, low corner, and I'll say, is it a moderate buy, strong buy? Because the analyst will at least give you a clue if that company is good or bad, right?
Mhm.
Start with that.
What do you think? So, like this company here, GRTS, it's got an implied volatility of like 438%. What types of trades could you do on one of those?
I would stay away from that. Why is it 400 implied volatility?
It must be
Probably
swinging.
I mean, you
probably
can trade.
earnings.
Oh, earnings. Yeah.
It could also be experimenting short squeeze, right?
Mm-hmm.
Like Riley, right? I was trading heavily on Riley. RILY,
RILY. Yep.
Yeah,
for a while,
RILY. Yeah.
right?
Mm-hmm.
But now I would stay away until until they submit their 10Q, right? There's a problem in that company, so they could have been a short squeeze right now, right? So those kind of things you have to understand why you're getting why is the premium so good, right?
Yeah.
The premium is good for a reason, right? There's no free lunch. So
Right.
you have to be a little bit cautious and look at these things.
True. True.
I've been trading for a while. I haven't got assigned that many. So my trades have been mostly winners. I've been, I guess, doing okay from a collecting premium. But I'm very cautious in how I trade these things.
Yeah.
What's your weekly, monthly income on the options?
I don't. So last year I collected 212,000 in premium. And year to date right now I'm at around $72,000 in premium I collected.
You said 212 last year,
Yeah, last year, yeah.
and it's just on Tesla or Tesla.
No. I trade mostly Tesla, but I trade a lot of other ones too.
Mm-hmm.
Gotcha.
But
So,
year to
Coach.
date I'm
Yeah.
71, 72.
Yeah. What's up?
You got it. You have another member who's literally killing it.
Yeah. Yeah. Post your trades too. That definitely helps out the community. That's awesome.
Yeah, Sam's a smart guy.
Yeah, I'm working on getting my options level elevated, and I'm going to be doing a lot more of it, other than like the 1 or 2 a week. Yeah, you guys have inspired me for sure.
Sam's probably out to dinner, watching his trades, making money.
That's awesome. Yeah, that's the way to do it.
You just gotta know what you're doing, and if you're gonna do those riskier stocks, you just gotta be okay with getting assigned.
Mm-hmm. True. Yeah. So Sam, yeah, post in the wheel strategy here. We got everybody sharing stuff here.
Yeah, I do that. I used to post in the Khmer channel
Mm-hmm.
and also in that channel, but some people get offended by it because they think I'm scared.
They think what?
You broke up. You broke up.
Yeah, you broke up.
But yeah, I'll do that. No, I'll post it, but I don't want people to follow my page blindly. But I used to post that in multiple channels, but some people got offended by that. It's gambling, it's risky, so I just stopped posting.
Oh no,
But I used to post.
that won't happen here. Yeah, don't worry about that.
What? Wait, Sam. What did they say? They didn't like it because of what? That's crazy.
He was boasting or something.
Maybe steer people. Yeah, I might steer people in the wrong direction because some people may lose their account, not understanding. I just stopped posting.
Mm-hmm.
No,
I use it a lot.
Look at the wheel strategy on Coach's channel. Myself and two other guys who you probably know very well. We all post our trades. It's fucking wicked. It's crazy.
Okay, I'll start doing that.
Yep, it's right here.
Yeah.
And the guy's not offended by it. I mean, again, I can only tell you what I do. I'm not gonna tell anybody how they should invest their money. I don't mind sharing, but hey, I don't want to get blamed either, right?
Oh no.
Things could go wrong. Who knows,
Yeah.
right?
No, it's just you're just showing it. It's not like you're telling anyone what to do.
Yeah.
Yeah, I went 12-0 this week. So
Awesome.
I gotta take a call with my wife, but good talking to you guys.
All right. Take care, everybody.
see you soon, boss.
Okay.
Did he sign off?
Yeah, that was good talking to him. Or he just muted.
Oh yeah. He was always in Kamir's channel
Yeah.
and always talked a lot. He's killing it for sure.
Yeah.
But he's a wealth of knowledge for sure.
Right. Oh yeah. Yeah, we have another one in the comments that he joined, but he said he can't talk because he's at work. So let's see. Who else here? Meniki, did you have anything else to say? Or Texas Heat is still on?
I don't know. I think people like. I think people like that your channel is like, just kind of like open. At nighttime, people like to like hang out.
Yeah, for sure. Yeah, we don't ban anyone. I mean, unless they're like crazy or something. We don't kick anyone out. I like getting hate comments. I don't get many of them, but they're fun. Yeah. Like I actually got one today that I think he misunderstood me, but he said I didn't understand options at all, and I was like, really? I was like, well, I'll show you some trades. I can show you that some successful trades I've done.
So wait, so Sam said he has 40 contracts a month out on Tesla. Is that what he said?
That's what I heard him say. Yeah.
People just need to understand with Sam is that he has a lot of money to make money, right? Like, so, and what he's doing is relatively conservative for him and his portfolio. And that's what he worries about, and that's what other people had talked about, that people who had much smaller portfolios were going to try to be extremely aggressive, trying to mimic possibly what he would do, which would be risky or riskier for a smaller portfolio.
Yeah. So what you're saying is essentially, the more money you have, the less risky you can be, and the more contracts you can sell, and you'll still make a ton of money and have less risk.
Well, it's less risky compared to his portfolio, right?
Right.
So if you have $1 million, but you have a very small percentage of that in a very risky option position that would pay well against the collateral used for that option, then that's cool because you still have $1 million. But if you only have the amount to do that one option position, then it's extremely risky compared to the size of your portfolio. So that's what he's able to do because he has such a relative large amount of money compared to the options that he's doing.
but he's also using margin. So how much margin will it take?
He is and he isn't. He is, but he said he has the cash to. If he gets assigned, he can just throw the cash at it, and therefore he's out of margin.
Right, but he's
Right.
buying the 40 contracts on margin.
Yeah, it is. But if he gets assigned, he'll just throw cash at it and be out of margin. It's like buying dinner on a credit card, right?
Right.
Once the transaction goes through, he's gonna pay He's gonna pay the credit card off.
Let's see. I'll look it up. 40 contracts. That's pretty crazy. Did he say 40 or like?
That's what I heard him
Or
say.
did I
Yeah,
not hear him right?
I heard him say 40.
So let's see,
And he's
Tesla.
got like, I think he said he has like 8 accounts on Fidelity or something. So
All right. Tesla's at 175. This is crazy. What was he out a month? He said. All right, I'll go to May 3rd. Let's see, 10 delta. What do you say? 10 delta?
yeah, I
10,
think that's
15
usually
delta?
he goes around there 10 to 15.
Let's see.
Speaking of credit cards, so that's another side rant, but I only use credit cards for the cash back. I never pay interest on them.
Yep.
I've tried to cover that on here, but it just gets no views. So, but yeah, it's an interesting topic for sure.
Yeah.
Yeah,
4% back on
10 delta
Costco
doesn't get you a
gas.
lot of money though.
It does when you have a shit ton of contracts.
I know. What do you
That's what I'm
say,
getting
40? I mean, that's so I'm at May 3rd, right? May 3rd. I'm doing a 10 delta, 145 strike. That's that's 11 delta. That's a 133 per contract. So no, he's not doing that. He's not doing 40 of that. That doesn't make sense. You know what I mean?
Mm-hmm. What's the premium on that?
He'd be happy to talk about it when he gets back on.
5,000? Nah, he's not doing that. Maybe he is. I mean, you do 5,000 one way and then 5,000 the next way, and that's 10 grand a month.
So in the comments, someone
And,
said,
"Yeah, you're not getting reached on that. You're not getting reached. That's a 10 delta. Tesla's not going down to 145,
Mhm.
right? That's what that is.
They could.
I mean, yeah. I mean, I get it. May 3rd. It's a May 3rd strike. But yeah, no, that's how you'll live. Maybe you do 100. And then
there's other holdings.
Yeah.
He's done a lot on Soxel. He's done Riley.
Yeah, I've been doing Riley. I like Riley. Riley's been crazy.
So I know he
crazy.
was. I know he was digging Soxel.
What would that cost me? Let's see. I'm trying to see what it would cost me on margin. $40. Let's see. Yeah, that's a lot of margin. 40 contracts. That's a lot of margin. That's crazy.
Yeah, someone in the comments said 40 contracts sold at 10 delta, 1 month out, 560 buying power, 1 million in long shares.
Yeah.
Yep. Oh, we had someone named Gman6969 join. Did you have anything to say there, Gman? Oh, he muted.
No, so, you know what, Coach? Sometimes people just like to listen.
That's true. Yeah. I'm just kind of new at this Discord live show, so it's like, oh wow, somebody joined. Let's let them talk.
I think asking would help bring people out of their shell, maybe. So
Mhm.
Yeah,
like,
sometimes, yeah.
Yeah, the
if
first
it's
couple.
small enough and you got the time to do it.
Yeah,
I wouldn't.
the first couple times I did it, I'd have 1 or 2 people join, and then they would leave.
Yeah, because I mean, listen. Sometimes people don't want to talk, so
Right.
and then when you ask them to talk, they kind of
They freeze
get
up.
shy away or they
Yeah.
don't want to jump. Yeah,
That's
yeah.
why I make a joke. I was like, who's brave enough to come on and talk to the coach? Oh, see, he left.
Yeah.
Talking shit about me because I'm not talking.
Yeah.
So that's so 40 contracts. I mean, that's what do you say? He has how many? What do you say? 11,000 shares of Tesla.
Oh, I don't remember what his share count was, but it was up there.
You said a ton. So yeah, why would you sell calls? Like, why do you even need sell puts? That's crazy.
Hmm.
But then, yeah, I mean, he's obviously he's obviously been very successful, right, in his life and
Yep.
killing it and
Yeah, he's
done right
business
stuff, you know.
owner.
Hmm.
Yeah.
Hey, are you guys
He's an entrepreneur.
following? Are you guys following? Oh, he's an entrepreneur.
Yeah.
Yeah. What does he do? Like he just runs his own business.
I don't know if I'm getting this mixed up with someone else. I know he owns a gym, and is he a teacher too? Is that him? Yeah, I think he's a teacher.
Jim, I thought that was Hoffman.
I was gonna say, yeah, that sounds like
No,
Hoffman.
he definitely owns a gym. He
Yeah.
definitely owns a gym. But he's had other businesses in the past too. I think he's had several gyms, and I think I think he's a teacher now.
Hmm.
In addition to that, so I've been in a lot of conversations with him. So
Yeah, he's
Oh,
definitely
cool.
definitely a wealth of knowledge.
Where on Kamir's channel or like in private?
Kamir and other channels.
Hmm.
Yeah. Cool. Yeah, no,
Almost
he sounds like he knows his shit, you know.
Yep.
Yeah.
What do you guys think of Roundhill investments with the 0 date to expiration weekly dividend ones?
I'm hoping for the best.
Yeah.
Wait, hold on. I bought some too.
Yeah. So I'm supposed to have the fund manager on Monday. So if you guys have any
really?
questions, yeah, put it in the thread, the questions for Roundhill. Yeah.
Yeah.
Oh,
Oh,
what?
yeah.
You know my first question,
What?
What's the tax treatment?
Coach? Right? Well, okay, that's number 2.
Yeah.
How and why is this different than Defiance monthly? Right?
Pays weekly.
Oh no, other than that, right? Other than
Yeah.
that, it pays
No,
weekly.
you're right,
Is there
you're right.
any structurally difference in terms of
Damn, you typed that
either
in quick,
protection?
Huh?
Yeah, Coach, come on.
Oh, am I loud?
No. I just clicked on the channel and you had already typed it in before I could get to it.
Oh yeah, because I'll forget.
Yeah, because I know Neos has pretty good tax treatment apparently
Hmm.
for their distributions.
Yeah.
Love Neos.
I'd like to see. Yeah, I'm really liking Neos. They're kind of pulling me more and more away from JetB and JetQ.
Hmm.
Oh, 100%. I don't even
But
touch
so
those
I'd
anymore.
like to see how they structure their tax treatment and if it's anything like Neos.
Right. So yes, tax is important, but what separates you from the monthly Defiance? Basically, right?
Yeah.
Mhm.
that's
Why
good.
why do I
Definitely-
want to take my 100 grand and put it into you guys? Other than who cares about weekly stuff? Tell me that the weekly stuff gives me more protection, gives me more upside. tell me why it's more important or better or different than already what Defiance is doing. That's the question. And if they're on a Monday, they should answer that nicely, right?
Yeah.
And who knows? Maybe they'll be like, "Yeah, there's no real big difference, but we're paying weekly."
Mhm.
Right. Exactly. Coach,
I don't know.
you can't let them weasel out. Coach, you cannot let them weasel out of an answer, right?
Right.
If it's not clear, you can't just move on.
Mm-hmm.
You say, hey, wait a second. I don't really understand what you just said. Like,
Yeah, I took
come on.
I took some heat for
Give
doing
us
that
a real answer here.
when I did that with Jay the last time.
You know?
Mm-hmm.
But Texas Heat, what do you think? Do you think it's just the same thing, or do you think it's like could be better?
I mean, yeah, I'm leaning towards that. It's definitely going to be extremely similar. I haven't personally dug into it, other than just what I hear in conversations and YouTube videos. So I haven't heard of any real key differences in strategies. That's why I would look forward to an interview if they could, talk about how they may approach something different compared to like Defiance and other places.
Mm-hmm.
So, and I think the weekly might be interesting in a sense of dividend reinvestments. Like if it's
you can drip it weekly, basically.
yeah, you can drip it weekly. That way, if that week is bad, you could drip.
Oh wow, I never thought
You
of
could
that.
drip and then immediately get you'd immediately see help within the next week after that. So you could kind of DCA quicker in a sense if it's moving down weekly. Because the problem with like a monthly, right? If it goes down in 2 weeks and then it goes back up in 2 weeks,
Right.
you didn't really get to participate in that if you wanted to. Unless you put,
But that's the whole point though with these, because they're dailies, so each day is different. Even though it's a month dividend, each day though is different. So,
yeah.
But
that's what I'm saying. So if like a week goes by and the fund's down or whatever the case is, and you want to just reinvest to get more shares to recoup quicker, then you could do that on a weekly basis. So the DCA implication might be, I don't know percentage wise if it actually would be drastically better or not, but the DCA implication could be worth it.
I mean, it is kind of cool to be like, hey, I'm getting a weekly dividend from the same fund, right?
Yeah.
And if you throw in a ton of money on it.
If I have established position, which I only do on a few holdings.
What are you holding right now, if I could ask?
I have a ton of income stuff on top of some option things. But no, I got all the classics, man. I got all the classics. JPI, JEPQ, all four Defiance, Spy Eye, Triple QI, FEPI, TLTW, SVOL.
Those are some good ones.
Yeah, we all right. So we all own the same stuff.
Realty Income.
Oh, you got Realty?
Oh yeah.
Ticker symbol O.
Oh,
Sucker's kicking ass right. It's kicking ass right now.
Yeah.
dude, I bought 5,000 of that when it was like at all-time low.
That's smart.
Nice.
Remember? It was like literally like a couple months ago.
It's so dumb, right? That's like one of the easiest plays, right? Because there was zero like underlying fundamental changes,
Right.
other than rates going up, and it was like
they were saying that they were selling, or there was some shit about they were selling, or they were going to sell to like some other Chinese company. There was like some bullshit online that they were going to like be selling out, or no. They created extra shares They created like a
Oh,
million
yeah.
extra shares.
Well, they were buying. I think they were buying something, and in order to
Yeah.
do that, they have to dilute.
Yeah.
Which isn't the greatest thing in the world, but the point of realty income is to hold forever and get some price appreciation and monthly dividends for forever.
Mm-hmm.
So yeah, it was
No,
definitely
when I heard that, I was like,
definitely a
fuck
good
it.
buying opportunity for sure.
Yeah. Yeah.
I just haven't. My portfolio allocation is basically where I want it to be, um, and so I just haven't had a lot of fresh capital to throw at it. I have here and there as I can, because I had a pretty established position before the big drop, um, but it's recovering here recently for me pretty nicely.
Yeah.
Oh yeah, I got Apple too, Apple, Nvidia.
I got them all. Coach, are we live on the channel, or are we just like talking?
No, we're
Chopping
live.
it up.
Yeah. Yeah, it's fine. I've been live for like an hour.
Yeah. So like I said, the with the weekly stuff, if it's going to perform well and similar to some of these other holdings,
Mm-hmm.
then I think it'll be a good play.
Yeah.
Because like I'm not really, my Nvidia position is fairly established, so I'm not really buying. So I'm just taking that distribution and doing other things with it.
Do you do like the dividend wheel strategy?
I mean, not actively, but I have so many holdings and I buy all the time that I'm sure I am, right?
Yeah.
So
Let's see. We had.
What's your
Oh, go ahead. Sorry.
What's your favorite one?
my favorite one,
Yeah.
it's a good question. Honestly, Feppy has been kicking butt, and Spy Eye has been kicking butt.
Feppy's a good one. I like Feppy.
So I don't know exactly how Feppy will perform in a down market. I don't know if it'll poop its pants or not,
Mm-hmm.
or try to hold its own. But other than that, I've really liked it. I think it tracks really well. I think it gives a really good distribution. So I think it's been doing really good. Nvidia obviously has been doing really good. I've been buying QQQI since it's been coming out. I'm assuming if it's going to perform or behave like Spy Eye, but a little bit more aggressive, then I should be happy with that as well.
Mm-hmm. Yeah, the Neos
The
ones are.
Defiant stuff,
Mm-hmm.
yeah, the Defiant stuff, I'm still a little up in the air on, right? I'm just like, okay, are they going to be aggressive enough to make some of the less favorable behavior worth it in the long run? That's kind of what I'm keeping an eye on.
Yeah.
And
Let's
then
see.
Spy T, that's gonna be a fun one to watch.
Yeah, so far
Which
that's
one's
a
that?
Spy T, SPYT.
That's Defiance.
Yep. That's got
Wait, is that the Treasury one?
No, that's Trez.
this is the S&P
Spy
T
500
is,
target income. So it's supposed to be a lower dividend. It's like a 20% annualized, but the NAV is supposed to be more stable.
Oh yeah, that's right. I remember her talking about that.
Mm-hmm.
Yeah.
Well,
Yeah.
that fund kind of feels like what we were all looking for, though, right?
Yeah, exactly. Lower yields, more stable NAV.
Well, yeah,
In
and
a
that's
sense, it's just it just has to perform well because you got Spy Eye, that has the good tax treatment, and there's even a leveraged JEPI and JEPQ fund coming out. Right,
By
so if
Defiance.
Dextron, however you say it,
Oh, Direction.
Direction, whatever it
Yeah,
is, the
yeah,
leverage people.
right.
Yeah, they're coming, or they have filed. I'll say that they have filed for 1.5 times leverage on JEPI and JEPQ.
Oh, interesting.
So,
I reached out
so
to them. Yeah.
JEPQ's been kicking ass, right, and doing like almost a 10% dividend. So if you're able to get that and it's leveraged 1.5,
Hmm.
well, now you're getting Q at 15% yield, which is going to be the same as QQI. So it's going to be interesting to see how it all kind of pans out.
Hmm. Yeah, I reached out to the Direction people about coming on. They haven't gotten back to me yet, but they would be good to have on too.
Oh yeah, yeah, it would be. I was asking in the other channel if I think the only one we had come up with was a Bitcoin one where it was I was asking if this was the first leveraged cover call fund to come out.
Hmm.
And I think someone had mentioned some Bitcoin one, BitDex or something.
Yeah.
Apparently that's a leveraged cover call for Bitcoin.
Oh,
But
okay.
I feel like this one for the JP Morgan funds might be the first, non-crypto ones.
Hmm.
So yeah, an interview about those and how and why they're planning on doing it would be very interesting.
Yeah, yeah, for sure. Yeah, I'm working on it. Some of them just are less responsive than others.
Yeah.
So the Neos funds, those are. I'm trying to remember, what was the appeal with those again?
They do I forget what the actual term is, but it's a special tax treatment to where their distributions, 60% of it is considered short term
Oh, that's right.
capital gains, and 40% is long term.
Hmm.
And then on top of that, they are able to classify some of their returns as return of capital to mitigate losses
Hmm.
in the fund. So they have a fairly active, uh, tax liability strategy that they're doing.
Hmm. Oh,
So,
okay. Let me see here. We
so
had.
that plus
Hmm.
plus yielding better than the J.P. Morgan funds has, got me leaning more and more towards them over time.
Well, so it's crazy, right? So JP Morgan knows that they're the competition. Why why is JP Morgan not either stepping their game up when Neos is like number one, it's a better yield, and number two, it's better tax treatment.
I'm
Other than being,
sure.
say, I'm JP Morgan, why would you put your money in JP Morgan? I mean, it makes
Well, because like I said, it is J.P. Morgan, and the funds that they uh, have performed very well.
hold on.
They
So that's
came
the
out.
answer, right?
They've
It's
well
JP
they
Morgan with history.
Yeah, they came out right before the downturn, right? And then there was a long, or not long, but a good period of time where JEPI was outperforming the S&P 500 for several months or something like that due to the downturn. And so they were able to do these consistent distributions. They were even able to do distributions beyond what the fund managers were anticipating. Even at the same time, they were saying this isn't going to be normal. It's going to come down. So everyone understood that. Um, and then they were able to have price appreciation and all that good stuff. And then they got massive institutional adoption in the funds, which was just a huge. I mean, I forget the number, but it's like, I don't know. It could be up to 1,000 institutions that have money in those funds, and we're talking like pensions and government funds and institutions and other fund managers and stuff like that have money into that. So because of all that clout, they've done very well. So they've probably had uh, little demand to come out with other stuff because they were making so much money, being so successful with just those.
Mm-hmm.
I forget what like the AUM is.
Well, the assets under management for which one?
Yeah, but for like Jeppy.
Oh, Jeppy.
33.8 billion.
Yeah.
Right. So I mean, it puts this stuff we're talking into shame.
Right.
So they could care less about your 700 million Tesla. It's
Right.
like, yeah, you do that, I'll do this. Thank you.
Yeah.
No, but I think when they were, the first part of covered calls, J.P. Morgan plus covered calls plus being brand new, which they were basically one of the newest funds out there.
No, they came out quite a while after the XYLDs.
Right.
Or the
so
YLDs.
other than that, yes, you're right. But other than that, to have a huge JP Morgan backing, everybody just put their money in it. All institutions, it's crazy.
Mm-hmm.
But I think Texas Heat. I think what you're saying is that I think QQQI and SPYI. I think that's going to be That's going to be the next.
Yeah, I think there's a lot of potential for those to grow significantly.
Mm-hmm.
I mean, listen, unless
sure.
SP, like, what about SPYI for what they've been around a year now?
I'm not sure.
Good question.
I mean, they've been doing really solid.
Yeah, it's been a good minute.
So, what are they? What are they doing?
August 22.
Right. So what are they? What's SPIY? What are they doing different than JP Morgan, right? JEP is doing, earning basically like almost like 3% less yield. So what is Neos doing? And in addition to that, tax treatments. I know you don't. I know you don't work for J.P. Morgan, but if you did, what would you say? Like,
well, they do have slight different strategies because JEPI is not technically the S&P 500. It's like 100.
Right, they're selected stocks.
It's like selected stocks, so it's a little bit different there. They have the what is it, ETNs or something like that. So it's a little bit different there.
I'm sure they'll put something.
I mean, SPY has been doing really well.
Yeah, I'm sure JP Morgan will put something out to compete with it.
So all the options that all the options that I'm selling,
mm-hmm.
and them getting all the cash, I'm putting into what's his name? Moneyballs.
Yeah.
He's like, hey, just put it all into FEPI.
Yeah.
QQQI, SPYI. So as I'm getting that cash from every option during the week,
mm-hmm.
I'm literally building those funds.
Nice, and then those will produce an income too.
Right.
Yeah.
Right.
That's awesome. That's almost like a dividend wheel. Getting into the dividends, that is.
Right.
Yep. Let's see.
Moneyballs is like living across the world now, right?
I know. He's living the fire lifestyle. Yep.
Well, hey, listen, but seriously,
Was that
he's
the guy who went to Taiwan or?
No, he's in like
Okay.
Croatia.
yeah.
Yeah,
Maybe that's what it
Bosnia.
was. Yeah, I think I've talked to him a couple times.
Yeah, he's very smart. He's like the goat on here.
Yeah, he's very, very intelligent.
Yep.
I mean, he you know, like when you know something and it's hard to like tell other people that you just know,
Mm-hmm.
that's him.
Oh yeah. Yeah, for sure.
But yeah, so all the options that I'm doing,
You're putting it into
then
those.
so I'm starting FEPI,
Mm-hmm.
you know, and I'm trying to figure out. So Texas Heat, let me ask you a question.
What's up?
You like FEPI, right? FEPI's great.
Yeah.
Agreed. We all like it at this
Mm-hmm.
point.
Yeah.
Do you, and do we agree with FEPI that it looks like, at least per the prospectus, that it can grow? Part of their prospectus is we're going to grow, we're going to capital appreciate, we're going to, right? Do we agree with that or no?
Yeah, it's definitely been capturing a decent amount of the upside.
Yeah. And producing good yield. So,
Yep.
and it's almost to the point where you could say, "Hey, I'm going to make FEPI maybe part of my foundational fund," right? To a certain extent.
I could think after I see it in a downturn.
Right. I agree. Okay. So, my next thought is, do you think, Texas Heat, that YMAX, the fund of the funds, could actually act like FEPI or be one of those funds that you're never going to get killed on the downside? You'll get a little bit on the upside because it's so diversified, because you've got so much like Nvidia and all that kind of stuff in it, that maybe you could shovel a ton of your money in it.
I think that YMAX may actually have a better chance than FEPI because it holds a more diversified sectors of underlyings, right? So it's not just, FANG is what, if it's like 15 holdings and it's all fairly volatile, big tech, future development type stuff, right? So in a downturn, there's basically all one sector. So there's, it's just going to do what the sector's going to do. Whereas YMAX, even as it sits right now, it's diversified in multiple sectors with JP Morgan and medical and Disney and different things like that. That has a potential to help in downturns. Not to mention that they could add additional, they will add additional holdings to it as they come out.
See,
So on a downturn basis, I think it could perform perhaps better.
FEPI.
No, YMAX.
Well, the way I look at YMAX, so FEPI actually is in the underlyings, right? But YMAX is in the yield max funds that are based on the underlying. So it's like a synthetic of a synthetic in a sense, right?
Mm-hmm.
Yeah. So
Fun.
I look at it like FEPI is probably the better choice of the two, just in my opinion.
Why do you say that?
Well, because you've got some of them that are synthetic positions that are already going down. Like, isn't it in? It's in all of the yield max funds, right? So Tesla, OARK, and then some of the others that are down.
Yes, yeah, and I agree with that. that it's because it's diversified. As long as the majority of the funds are performing well, it'll perform well. But we haven't yet to see either YMAX or FEPI in a environmental downturn across the board.
Mm-hmm.
So I don't know exactly how well FEPI will weather that, based on its underlying positions. So that's why I was thinking that maybe YMAX might do better, because it has underlying positions that are potentially not going to fall as aggressively as just big tech funds.
Mm-hmm.
Oh, I see what you're saying. Like, let's say like JP Morgan or like the less volatile ones is what you're saying.
Yeah, like let me pull. So
Coach, you get what he's saying though? I get what he's saying.
yeah, like you got JP Morgan.
Oh yeah, there's some stability because you've got Disney,
Medical, Disney,
Disney, yeah.
Exxon
Exxon.
Mobil. Yeah.
So you got some in here that are that's diversifying not on the sectors as well. Some, not not a huge amount, but some. And so maybe because of that, in a downturn, YMAX I think has a decent potential to perform well. So.
Mm-hmm.
What do you think about that, Coach?
I think downturn performance is important.
Yeah,
and we
we
just haven't seen it on either.
Right.
Absolutely, yeah.
Right, and we're just talking and chopping it up here, and who knows if downturn happens, then we'll all find out. But
right,
Coach, what do you think about that? What he just said, though. Right now that we kind of discussed that.
Yeah, it makes sense to me. Yeah.
Are you still? I like FEPI a lot. But
me too. It's one of my favorites.
It makes sense though. Like,
yeah.
So if the Mag 7 and everybody else is diving down, getting crushed, but yield max, YMAX, or I should say YMAX, right, is now you've got other funds in there that are gonna kind of hold things up.
Mm-hmm.
It would be interesting.
I wouldn't say because the ratio is still definitely tech heavy, but in a downturn, but in a downturn, if you can perform 1 to 5% better than like what FEPI would do, then I would rather be in that.
Mm-hmm.
I guess I'm talking about like maybe like a 10% down.
It's got Netflix too.
Oh, NFLY.
Yeah, right. Yeah.
Yeah.
I love Netflix.
I mean,
Netflix is
I don't really consider that tech.
Right.
In downturns, people buy they get Netflix subscriptions.
Mm-hmm. True.
So I actually listen. I actually don't think. I think that, and I literally know nothing about stocks or anything like that, but I think FEPI and YMAX. I think they're going to be good funds, man, guys. I mean, FEPI, Texas Heat. Tell me what you think about this. Here's why I like FEPI, and here's also why I like Alti. In their prospectus, they can bring funds in, take funds out. What's better producing, what's not producing. That's why I really like FEPI, and that's also why I like Alti, because the prospectus says, hey, we can do whatever we want, basically. Based on the market, we're going to bring things in, take things out. We're going to make sure we keep, that capital up or that volatility up. What are your thoughts on that?
Yeah, I do have some Alti, by the way. We'll see how it does.
Did you get some?
I've had it. I forgot that I bought it a couple
Alright.
weeks ago. Yeah.
Yeah, I have 11 shares of it.
Yeah.
What do you think
But
about that, though?
I don't think it's necessarily comparable to Feppy. Because Ulti is going to be the Wild West, right?
Mhm.
They don't really care about price appreciation and stuff like that. And the only reason why they're wanting the
Let's look.
ability to swap underlyings in and out
Mhm.
is just so they can. This might not be the best term, but they're going to chase implied volatility.
Yeah. I had their holdings
so
up.
that's-
Absolutely.
Yeah. By
So
the
that's
way.
why they want to be able to do that.
Mhm.
So if the guy behind the keyboard does well, then we'll do well. But that's from what I
Well,
gather
but
from what I
remember,
gather.
we're talking Feppy, which is we love apparently, right?
Yep.
25%. And then what if Alti did 100% every month?
That's what you were saying.
Consistently?
Yeah.
What if it did that?
Yeah, that would be.
So listen, he's swapping things in and swapping things out based on volatility
Mhm.
consistently. If he could do 100%, every person in the world would be in this fund.
Yeah. Oh yeah.
All right, so let's just. I mean, I just want to see what he can do.
Yeah, but it's the same concept of Coney and Vidi and all that kind of stuff, right? Like
No, the same concept, but there's multiple funds. It's a fund of Conies, basically,
Mhm.
right? And so look at Coney. How much did Coney jump up, right? In capital. So if you have 10 Conies within the Alti, let's say, family, and they're all volatile and they're all jumping up, why won't that go sky high?
Mhm.
Help me out there, Texas Heat.
sorry, run that last part by me again.
So if you have Alti, which is super volatile stocks, right? So you said, well, it's just like a Coney. That's what you said, right?
The strategy.
Oh yeah, well, it's all the same strategy.
Yeah.
All the YMAX is the same strategy. I'm just saying, if you had 10 Conies in Alti family, that would be literally the most incredible fun you could ever imagine, right? Or what is it, MSTR,
Mhm.
right?
Oh yeah, MSTR.
Yeah,
That's, yeah.
but the underlyings of Ulti are not necessarily funds that are skyrocketing. They're just high implied volatility, which means it could drop off a cliff and still have high implied volatility.
Yes, that's true. But if you look at the holdings that he's got right now, they're all like it's okay. So I guess my point is this: every one of them is, yes, high volatility. We all agree then if it's all high volatility, it's going to produce 100% every month. But then if he puts in high volatility stocks that go up or are going up, because he can change things out and he can know, hey, this stock, this market, we can throw in Nvidia, we can throw in this, we can throw in that, right?
Mhm.
That fund is going to go up too. So you're going to get like the Conies of the world, the MSTRYs of the world, the square, all of them. That's what I'm saying. That's what I'm trying to like. Am I totally off basis, or could that possibly happen? I don't know. Tell me I'm
I feel like
wrong. I'm
I feel
right.
like you're viewing it. I think
crazy.
you're viewing it a little grandiose thinking, but
Okay, that's fair. No,
it's still
that's
still
fair.
a little new. in my eyes.
Oh
Like I
yeah,
said,
it's super new. It's
this
super
is
new.
like I said, it's the same deal where they're going to be in stuff that's in high volatility. Like they're not caring about price appreciation. They're going to sell to make income. Now, whether that means you're getting your own money back or not, or whether they're taking massive losses because the underlyings are going down, kind of remains to be seen.
Well, not really though. Look at all the other YMAX funds.
Yeah, but those are a lot different than these, from what I've seen. These are a lot. These aren't your Mag 7 big companies, $1 trillion worth of companies. These are a little bit more niche stuff.
Yep.
Oh, so you're saying there's not going to be as much? So wait, what are you saying though? I guess that's what I'm saying. Asking. Like, why couldn't it be 10 conies in one fund?
Because it's not like because like Nvidia and not
Have you
necessarily
have you
Tony
have
Bennett
you
and all them.
have you
Those are
seen
those are massive companies.
have you seen the funds in Alti or no?
Not in a while. I was just trying to pull it back up.
Yeah, so check those funds out. I mean, those are shooting to the moon funds.
In
I mean,
Ulti?
that's all I'm trying to.
Yeah,
Yeah, in
Carvana's
Alti.
trash. GameStop's trash. Robinhood is eh.
Yeah, I have their holdings up here.
Uh,
They've got some SMCI, they've got some Root, NNOX, MSTR, MSOS, Mara, Labu, Hut. Yeah, some of these are like
yeah,
not as well known, but yeah, like you're saying,
like Carvana. I don't even know how. I thought it was going out of business.
right?
Kind of deal. So, like I said, this isn't a fund that's holding wonderful companies that have massive. Because Nvidia has high implied volatility because it it has so much upside potential
Mm-hmm.
and so many eyeballs on it, right?
Right.
These have implied a high implied volatility because they're so tiny that any good or bad news can push this shit up or down drastically.
Mm-hmm.
So it's kind of two different stories from what I can tell.
Yeah, true.
And if the guy behind the computer can capitalize on that, great. He's able to make money where a lot of people probably aren't.
Mm-hmm.
But
What do you think the yield will be then? A full month.
For Ulti?
Yeah, for Alti. It
So
paid
our last
a
dividend was
buck.
that
It
was
paid a buck. It was like 9 days trading.
oh, so we could at least be at $3. Right.
yeah, I mean, I think Jay I think went out of his way not to give a number.
Mm-hmm.
No, I think he gave it
But-
up
but-
in the max
but I-
in the max
But he
interview.
did definitely convey that it was going to be high.
Yeah.
So, and again too, like high with what amount of consistency,
Mm-hmm.
But he
Like,
knows that, right? So he said in the max. Here's the thing. He said in the max convexity interview.
Mm-hmm.
He literally said a few times. If you listen to it, he's like, "We learned our lessons." He's like, "We learned number one what people like. We learned what we can and can't do." And so he knows that he can't pay out $3 on a fund and then it's going to go all the way down and they're going to have to split, right? Or do the reverse split. He said it multiple times. So I want to see based upon, I think this is Jay's fund, Alti.
Mm-hmm.
This is Jay's fund. He's like, fuck it. I'm going to fucking create so much volatility. I'm going to make sure it doesn't lose a lot of NAV because everybody's giving me shit about it.
Yep.
And we're going to pay out $2, $2.50. And then when one of these companies, whatever, I can take it out. I can put another company in. I think this is Jay's fun to like prove everybody wrong. This is it.
Right.
Alti.
Mm-hmm.
I can hear it in his voice when
Yeah.
he talks about Alti.
Yeah.
That's my thought, Texas Heat. I could be 1,000,000% wrong, but that's my thought.
No, I agree that it's supposedly going to have a high yield, and from what I can gather, I would assume that it's going to hover somewhere around the 75%. I think it could have extremely well months where it does well better. This thing is going to be so volatile that there could be some months where it does 25% better than that, and other months where it does 25% maybe less, depending on how they structure the distribution.
Mm-hmm.
Because they are known for paying out more than they should just to hit certain percentages. But my thinking is that if they're actively trying to do like 50% on Tesla, and this is supposed to be consistently more than that, I would say 75% would be in the ballpark of what it might be doing long term.
Yep.
I just think since, even Coach, right? Since Jay's been on, we like give him shit about the NAV and this, that, and the other.
Oh yeah.
I don't think this is the fun that he's like. I think he's like, hey, I'm going to make sure. And some of the other companies are even doing it now, right? Defiance is doing it, right? With the one that they're going to reinvest it for you, so the NAV doesn't drop.
Mm-hmm.
He's going to make sure that this NAV does not go down.
Yeah, I can see that.
It can't. He's going to not let it go down. Like, he's just not going to let it go down. This is his fund. This is Jay's play fund. He can put in other funds, take them out, put them in, take them out.
Mm-hmm.
He's not letting this one go down, because if he does, then his entire philosophy of what he's doing doesn't work.
Yeah. There's a lot riding on it.
That's my own thought. Like that. This is Jay's fund when they were doing all this stuff, and they had a learning curve. They had definitely a learning curve, learning process.
Mm-hmm.
And then they did the YMAG, and then the YMAX. And then he was like, you know what? I can create so much money if I can use my own funds. And that's what he wants to do.
Yep.
But he also knows, because Coach asked him a million times, what about the NAV? What about the NAV? What about the NAV? Right?
Yep.
He doesn't want that, like, I don't know, social media or whatever you call it.
Mm-hmm.
I don't know. I just think he's going to treat it differently.
If
and maybe in a year from now, I could be the.
Then he's going to have months where it does not perform.
No, you're wrong. High. What do you mean? If it's super high volatility stocks, you can literally do nothing and make money. I didn't know that like 3 months ago. I know it now based upon my sensei Hoffman. But like you don't need it to. You just need super high volatility. I can make $5,000 in 1 month super quick on a high volatility. No, I'm sorry, $5,000 in 1 week on a super high volatility stock by selling 1 2 or 3 puts, and I don't have to do anything.
Hey, I hope you're right. Like I said, I'll just believe it when I see it. Right?
I know.
Still
I'm
too
trying to be
new, like,
optimistic.
Yeah.
so. And who knows? Like you said, maybe it does such kick-ass job in the vast majority of environments that if it does have some downturn, we don't care, right? It's like, okay, I don't care.
Mm-hmm.
It'll do better next month, kind of thing.
True. Yeah, we'll know by the 3rd. So like next week. Oh no, wait. These are on a different calendar. These are going to be like mid-month.
Yeah.
Yep.
But we all got some here though,
Yeah, I've got 100 shares of it. I just looked.
I think it's fun to discuss, and we'll see. I mean,
Yeah, for
I hope
sure.
I'm right.
Yep. Well, anyway, guys, great chatting. I got to get going, but yeah, great chatting. I'll try to do this more often.
Yeah, it's been fun for sure.
Yep. All right.
Hey, Texas Heat, man. Good talking, dude. You're a good dude, man.
Yeah, I'll be in here and whatnot. We can definitely chat it up.
Join back. I'm going to try to do a few.
Wait, Coach. Can we stay in here? Or
Yeah,
no?
yeah. Stay as long as you want.
How
Yeah,
does
I'm
that
just
work?
gonna. Yeah, I'm gonna drop, but you guys stay in. Yeah.
All right, cool.
Yep. All right. Bye. All right. Thanks, everyone. Like, comment, and subscribe, and we will see you all on the next one. Good show tonight. Take care, everyone. Good night.
So you like